What do you mean by kind of, these intangible assets?
Yeah. So that's a great question. And I think intangible assets are really one of the most important things to define inside of investment banking scenarios. So I can answer this from the professional perspective, right? So as an investment banker, one of the things that we're always focused on doing for our clients is trying to create a more beneficial financial outcome. So whether it's selling a company inside of a merger and acquisition, whether it's raising capital and trying to lower your cost of capital or increase your access to capital. What we found is that companies that are innovative or companies that have a lot of off financial statement value also have a lot of intangible assets. And the challenge of having a lot of intangible assets inside of a company is that how do you measure that, right? So you could have a company, let's say it's running at a loss, but it has found a way to reduce the treatment times in chemotherapy by 50%, just for example. That is not measured on a financial statement, but clearly that is very valuable. And so when that company tries to go to sell their company or tries to go raise money or maybe do an IPO, all of their competitive advantages are wrapped up inside of this innovative value. And so that's really how we talk about intangible assets. Intangible assets is an accounting term. It is defined by GAAP and FASB rules. It has to usually do with patents, trademarks, copyrights, etc. But intangible assets really inside of innovation have to do with competitive business combinations and measured competitive advantages that create optimal outcomes for a firm.
That's great. Thank you, Josh. So for this, and we talk about intangible asset, and you're actually talking about measuring and valuing intangible asset.
Right.
So we know that even sometimes measuring kind of valuing a stock, which is tangible.
Right.
That is very hard.
Yes.
So I think I have two questions. First question is, how do you approach the valuation of this intangible asset?
So when you're valuing an intangible asset, or you're rather trying to help your client achieve an optimal outcome in an investment banking scenario, our basic premise inside of Jahani Associates is that the way you do that is by identifying and developing your most competitive intangible assets. That's the first step.
Identification.
Exactly. So our basic premise is that the way for you to maximize your value, the way for you to maximize your price when you go to market or your competitiveness is by maximizing these intangibles. And so it really starts with a business first view, both an internal view and an external view. The internal view being, what are the business competitive advantages that I've created? And then the external being, how can a strategic acquirer, a financial acquirer, or the marketplace utilize those competitive advantages to make 1 + 1 = 3? And that's the basic question. The hard and fast rule about how do you value something like an efficient business process, there are different scenarios where you value it. But in fact, there are very limited GAAP and FASB rules as of right now about the valuation parameters that you could use for that. So the answer to the question is it can't really be valued down to an exact science, which is why it's so important for investment bankers or for innovative companies to understand how it can at least be used to create an optimal outcome.
That's great. I think you mentioned that this kind of intangible asset, before it was actually one accounting term, right, in the financial report of kind of this financial calculation.
Right.
So, but now you have this great business, and you're working in this area, which means that you have identified a very nice business niche, right? Not many people, or this is really an emerging opportunity area. A lot of firms will find it very useful.
Right.
So, how did you find this niche?
That's a good question. So I started my career at Deloitte, and I did consulting on my own for quite some time. And I had a couple of clients who were going through investment banking scenarios, some M&A scenarios, some capital raising scenarios. And what I realized was that the driving factor for all of the investment banking decisions and financing decisions had nothing to do with EBITDA. They had nothing to do really with gross margin. They had nothing to do with these traditional accounting terms that people throw around in the investment banking community all the time. It had to do more with vertical integration, with revenue per user, with daily active user, with more specific business terms that were relatable to other businesses. And so when that happened, I realized, okay, so we're actually already, I, Joshua Jahani, am already providing the service to the market. So let's just formalize this and offer a complete package to private equity clients, to venture capital clients, to the portfolio companies inside of PE and VC, as well as other innovative companies.
That's great. I think you mentioned that actually when a specific investor, when they make a decision whether to invest or not, of course they can look at the financial report of a company, and you mentioned the EBITDA, all these kind of quantified terms. But you did mention that something that is key to that decision probably has little to do with EBITDA.
Exactly.
That is something kind of, in my mind, I'm interpreting that it's based on some feeling. And that feeling that is actually has a lot to do with this intangible asset. Right. And also you use the word, I think some of the service your firm provides is that you are trying to formalize this framework that will help the decision maker to better develop that feeling about that company. Right. So when you talk about these formalizing things, because you can see a feeling comes from all these different components, including tangible and intangible elements of a company. So that actually kind of naturally leads me to, there are so many things complicated, so many elements. They're having all these very complicated interrelationships. Right. So in that case, and how do you deal with that? How do you disentangle all these complicated things, and how does systems approach help you? Yeah,
that's the perfect question. And that's really the question. And the answer to that question is the business model inside of Jahani Associates. So we take a simple approach, but it requires a lot of work. It's a hard but simple approach. First, we identify what are the intangible assets that matter. Right, you could say an intangible asset, a man or a woman is very handsome, they're very good looking. This is not necessarily an intangible asset that's going to command a premium in the marketplace. But if you say that this man or this woman can run 50% faster than the average person, and now you're talking about some kind of sponsorship activity with a running company, all of a sudden that intangible asset plays a much more significant role in a financial outcome. So that's the first piece, is what really matters. And it's always, Oliver, it's always directly dependent on the business that you're looking at. The intangible assets for the aerospace industry versus intangible assets for healthcare, they're very different. And that's where systems engineering comes in, is that it's not management consulting, it's not a KPI of understanding throughput, or it's certainly not investment banking of talking about EBITDA multiples, right? EBITDA is just the outcome of the story. The story is really, how are we engineering a business system to create a predictable, transparent process of competitive advantage. And the competitive advantage can be higher margins, it can be EBITDA, but what drives the premium is not that the EBITDA is high, it's that the competitive advantage that you've engineered inside of your business is what matters. And so you have to have an extremely detailed understanding of all of the different stakeholders and facets at play inside of a vertical, like healthcare. Right, healthcare, you have government, providers, payers, patients, etc. All of the different intermediaries. Those make a different and a more significant impact on business combinations than something like an aerospace, where it's more heavily in government.
It's good that you brought up, those many different what I call application areas or examples. Yes. Right, aerospace company, they have some intangible asset, which is different from a healthcare company. Right. However, you as an expert, you are working with all these different sectors, right? This kind of reminds me, I don't know if it's right, but I believe it's right, at least from my personal experience. I think kind of, something that makes us successful, either when we were 5 years old, or when we are now like our own, current age. There's something that is very consistent. Right. So in that case, in that sense, what I mean, something or some approach or some methods you use to work with an aerospace company to provide your insight to them, to dig out their intangible asset versus when you work with like a healthcare provider and helping them find out their intangible asset and leverage on those things. These are, so many totally different companies or firms, but your approach, you must have some secret that the same secret, the same approach you use that make you to be so successful that provide such a satisfying service to an aerospace company.
Right.
They're happy to a healthcare. Right. Because it's impossible to imagine that all in a sudden you become an aerospace expert, you become a healthcare. However, you provide value to these kind of very different companies. So again, I'm probably trying to dig a little bit into depths. You must in your mind or in your working procedure or in your culture of your company, there must be something, that has been created. That suits towards all these things. That's what I call probably a system approach. And what is that?
So I don't know how much of a secret it is, but we call it our intangible asset methodology. Yes. And so in the intangible asset methodology, we have 3 phases. We have identify, develop, and monetize. And it really doesn't matter what vertical you're serving. You always have to identify, develop, and monetize. And at each of those phases, there are different stakeholders and different application areas, like you were talking about, that matter, right? So if you think about, we've had clients who were really strong in product sales, and their ability to create a product that was sticky in the market was much higher than the industry average. So we identified that as the business competitive advantage, as the intangible asset that we knew would drive a premium in the marketplace. And so then identifying that, we say, okay, now we've identified this, how do we develop it? And the development part, it depends, right? In that case, it was really about creating transparency and clarity around what that secret sauce is. Not giving away trade secrets, but at the same time, giving away enough information so that people could understand the value of that stickiness of a product that you generate. And then the monetization, that's the investment banking piece, really. So it's all systems engineering until you get to the end, which becomes investment banking. And that's where you say, okay, we're going to monetize this how? Lower cost of capital, higher access to capital, higher premium when you go to sell the company, attracting better talent. There are a lot of different ways that intangibles can play into the story. Attracting talent is not necessarily an investment banking outcome, but definitely capital raising and M&A is.
That's great. So, thank you, Matt. I think in this area, you've been in this, I don't know, how long have you been in?
We've been doing this kind of work for about 5 years.
For about 5 years.
Yeah.
So, you're so young, you're so successful. And I know that, young and successful people, why they're successful is that, well, they're working very hard to make sure their current job is very well done. They're also, in the meantime, looking ahead. Like you are a visionary, right? So in that sense, so what do you view as a key system challenge in your industry specifically, and in the finance industry in general? What are those key system challenges?
So when we look at, we call it the rise of intangible assets. When we look at the investment rate in intangible assets, it's been soaring since 1995. In 1995, we had the dot-com boom, right?
That's
so
right.
With the rise of the internet, with the rise of technology, so have intangible assets risen. And that's not a surprise. But as this pace of investment, I recently read an article in Harvard Business Review that said the global investment economy was going to be something like $80 trillion, which is insanely high, and it's been growing at this extremely fast rate. So we're seeing all this money pumped into the system, but we're not seeing an equal catch-up of reporting standards, right? And it's really tough to create reporting standards around goodwill and business combinations and these things, but we have to have people who are thinking about how to measure and how to predict in some way this intangible asset value, because it allows us to not leave money on the table. My basic premise is that intangible assets, both investors and innovators, they get a little ripped off whenever you have an intangible asset company because there's no way to really talk about what the value is. So even if you get lucky and you get a massive premium, it's unlikely that premium will sustain itself because you don't know exactly what that premium was assigned to. And what I think happens more often than that is that they're actually not getting enough money, is that people with intangible and innovative-based companies are getting less money when they sell their company. They're getting a restricted access to capital or a higher cost of capital because they're at the mercy of the financer. They're at the mercy of the people who have the funds because there's no real reporting standard. So I think that's what it is. It's about reporting standards, and it's about transparency inside of this sort of documentation that's necessary to create value.
I think that's great. I think you mentioned this keyword, like a reporting standard. I totally agree with you. So I know, like, kind of you are, I teach a course, system engineer and a Six Sigma for reliable systems.
I took that course.
Yes, and for that one, when we talk about a Six Sigma process, right? We could carry out a Six Sigma project for a product, which you can measure because it's tangible.
Right.
And in the meantime, the thing you are doing reminds me of probably carrying out a Six Sigma project for service process.
Yes.
Where it's very hard for us to even think about how to measure these things. However, if you think about, when you talk about this reporting standard, that reminds me of the word protocol. Right? How, like, you work with, financial firm A, financial firm B. Of course, they operate with all these different things. However, can we design a protocol that these firms in the end they will agree upon, they'll follow it, they will do, this kind of standardized reporting process, such that, for example, Standard & Poor's or Moody's can incorporate those kind of standardized terms that you, Josh, invented and into their evaluation of these firms.
So, I mean, Oliver, you hit the nail on the head, right? And at this point, I have to mention, so I have a colleague, a gentleman by the name of Baruch Lev. So I teach at NYU, and Baruch also teaches at the Stern School. And Baruch has literally written a book, several of them, on intangible assets and the reporting standards and the protocols that would be required for developing these kinds of standards. And I think he gives a recommendation in his book, The End of Accounting and the Path Forward for Investors and Managers. And he talks about the Strategic Resources and Consequences Report, I believe is what he calls it. It's at the end of his book. And it's exactly what you just outlined. Now, the challenge is that, yes, a solution would have a more detailed protocol for what to measure and how it's measured. But then at the same time, the verticals are so specific. That's a big advantage of financial statements, right? As a net income statement for a manufacturing firm versus for a technology company are the same. They look relatively the same. They have different line items, but they give you the same level of information. And I think that, to go to the previous question you asked earlier as well, is really the big challenge we have to solve now, is that we know that the value off the balance sheet is higher than the value on the balance sheet now. And if you look at rising goodwill, it's very high, right? How we solve that has to at first start very simply because you don't want to disrupt value. That's the challenge, is that we did a survey of 100% of the merger and acquisition activity by tech giants. And we determined that the average goodwill paid in each transaction was something like 77%. Now, if you implement strict reporting standards, you can expect that 77% would go down. And that 77% was out of, I think, about $100 billion. So it's a significant amount of money. And so you have to be very careful at the same time when you increase reporting standards and reporting information. You don't want to create so much that you would see a lower investment activity and then it would hurt the economy. Right? And that's really the challenge that people in GAAP and FASB and regulators have. It's really their challenge. My job is more to acknowledge the system and help my clients increase their position inside the system. But absolutely, the answer is in protocols. In terms of beyond that, what exactly the answer is, that's tough. But we'll get there. And I think it's going to be some combination of big data, I can imagine for vertical specific financial statements or vertical specific reporting that have to do with daily active users, sales funnels, things like that. Those metrics play consistent roles inside of investment banking decisions for certain verticals.
Thank you, Josh. I think this is great because I think you touch upon some other elements, in this kind of measure and evaluation, and also help companies with their intangible asset. But when we speak of intangible asset, for example, human factors, right? Corporate culture,
right?
Which actually also depends on human factors,
right?
Right. So with these things, actually, system engineering has a very deep root in military. You might know that system engineering got developed very quickly after World War I and World War II. So as a result, there were a lot of funding or support, for example, from Department of Homeland Security or military applications. So a lot of universities, of course, so far there are not many system engineering programs, and among the very limited number of system engineering programs, you can see that there are a lot of military-related elements there. However, Cornell system engineering, ever since it was started, actually, the founding faculties, I think they made a very long view kind of strategic decision that Cornell system engineer would like to focus on commercial systems. Would like to focus on commercial systems. So of course, the most of firms, your consultants are also like a commercial or financial firms. So when we speak about commercial system, and also in recent years we have also even better fine-tuned like the opportunity area for Cornell system engineer, which is we think that we like to develop human-centered complex systems.
Yeah.
And when we talk about human-centered complex systems, financial firms, definitely, right, it's they're humans. They don't use a lot of machines. Of course, they use computers, right? There is human-computer interaction, which is actually a important area that we look at. But I want to come back to this speaking of these human-centered systems, and human factors play such an important role in this intangible asset.
Right.
So when you either evaluate or work with the firms, to provide consultants to them, what's your view and what did you observe in terms of the human factors, human-related issues?
You mean, what's my opinion on the role of humans inside of intangible assets?
That's right.
That's funny. So I think there's a phrase in Silicon Valley that really says that innovation is solely built on talent. The most important intangible asset is talent. People always say that. Now that's true, right? If you have, Mark Zuckerberg's a great example, right? He's the CEO of Facebook. You take Mark Zuckerberg versus someone else. Clearly the man is very talented. I would argue that the human component, although extremely powerful and important, has to be quantified just as rigorously in terms of a intangible asset outcome as much as anything else. Obviously, like we went back, right? We talked about someone who is handsome, right? A person, male or female who's handsome, right? Or someone who's maybe charismatic. That is obviously extremely significant for a company culture. But it's not so much about that your leader is charismatic. It's that your leader is charismatic and passionate about new product development in China. So how many new products have you developed in China over the last 6 months, or whatever the time frame is? How many of those products were successful? What was the ROI of those products? How would a strategic acquirer look at incorporating those products or your go-to-market strategy inside of their portfolio of products who they also want to break into China? So without a doubt, the human component is extremely important, but I think that focusing too much on the human component simply raises questions that we can't answer. But to go back to your point as well about the commercial systems and the role of humans inside of systems engineering, it absolutely has to be there. You have to, if charisma is what you want to measure and identify, then how you develop charisma it could be out of the number of speeches, right? I mean, if you have someone who's an extremely famous speaker, like if you have a Tony Robbins, right, who's clearly a very skilled speaker, and then if you're able to say that Tony Robbins spoke 300% more than another competitor, that's going to drive a premium. So you have to follow it through, and that's the intangible asset methodology.
That's great. So, I mean, I did learn a lot today from you. So you know, speaking of that, you know, you have a very nice vision about not only your own industry, right? You also have very good vision and thoughts about other industry, and you did talk about like the systems challenges. You know, for example, in your industry and probably in the financial, because it seems like most of your clients are they financial firms, or are actually they are across the spectrum?
Most of our clients are in healthcare, but we do service across the spectrum.
Okay, so in that sense, you know, you talk about the system challenges. Of course, we all know that people say, you know, challenges also mean opportunities.
Right.
So where do you see?
I mean, that's the business model, right? So the challenge is the limited amount of reporting information, and we'll talk about this at the lecture if you're able to make it. If you're not, that's fine. There's limited reporting standards and reporting available on intangible assets. So therefore, the opportunity is that if you know how to identify, develop, and monetize your intangibles, you will maximize your value for investment banking scenarios. So that's what it is. So my firm is really built on the identification of that problem and then solving the opportunity with our services.
So I think that's, you know, that's very good. If you don't think that it's going to be revealing any of your secret, so how do you think, you know, system engineering tools, what system engineering tools would help you to capture those opportunities?
When you say tools, you mean like tell me what you mean by tools.
You know, actually, not necessarily tool, like either, you know, kind of system thinking, you know, system integration, analyzing, or for example, system architecting.
Yeah.
Or even like I don't know. I suppose you also took David's class.
Yeah.
5100, right? So again, like, you know, you saw these challenges and you identify these opportunities, and it's only you who are going to be able to capture those opportunities, not anybody else, because you have this very unique set of either skills or views or thinking process or approaches, right? That's why I mean, if you don't think it's going to be revealing your secret, so what are going to be those, again, you know, approaches or methods you feel that you are so uniquely positioned to harvest? Yeah. That opportunity.
So we've made good use of goal question metric and analytical hierarchy, right? I remember that from my time at Cornell. So we've used that on a couple of client engagements. We go deep into this needs of the vertical, right? So we do a lot with data mapping. I mean, we've gotten into big data analytics with MapReduce and Hadoop and different kinds of solutions that exist in Google Analytics peripheries. So GQM and AH, analytical hierarchy, are definitely the systems tools that we use often. And then beyond that, or beyond something like a systems architecture diagram, process engineering is huge. That all those Lean Six Sigma principles, all those things we did as part of the black belt, we use pretty much all of them. We haven't used mean average control charts yet, but that's probably because we just haven't needed to. We could, right? Anytime you have a sigma, right? So it's really a amalgamation of all of them, and then assigning the right one to the vertical, because it is different, right? Obviously, it depends on healthcare, like we talked about. It's got to command healthcare business process engineering is huge. Mean average control charts I've never used, right? So it's that kind of thing. Right.
I see. You know, that's great. Kind of, you know, what you talked about made me kind of really envy the industry you are in. And especially, you know, as a director of system engineering, I was wondering if you would like do us a favor. For example, think of Cornell system engineering as a client. How can you help Cornell system engineering to identify, develop, and value our intangible asset?
I can give you two real-world examples. So I'm working with Dave Schneider. And Dave Schneider, Dave is very much a visionary, and he's very much architected a lot of the thinking behind, you know, the way that I learned the tools here and then the way that we use them in the marketplace. And he's got a couple of projects right now. One is for a Internet of Things smart building solution, where he has some potential strategic partners that he's using my firm to help identify, develop, and then create a monetization structure. We're working with the CTL office here at Cornell, a gentleman by the name of Martin, who's also very strong, to say what is that we could really license, or what is that we could really give away in the absence of a patent, right? Because it gets, so when you have a patent is easy, right? If you don't have a patent, that's where the work really starts. So that's on one of the projects that you guys have here with the HVAC solution and the Cornell Sustainable Development, CUSD.
Yes.
And then another one that we're working on is related to robotics. It's EdTech. So it's a way to utilize robotics to accelerate comprehension and understanding in certain kinds of educational environments. And it's the same kind of thing. It's saying, okay, maybe it's not exactly patentable, but it's definitely creating a unique selling proposition or unique value that we can measure. So that's the identify and develop. And then now we need to develop that more in terms of how it would be used from a business combination perspective to a strategic acquirer. So on the HVAC side, we're looking at Lutron, we're looking at Nest, we're looking at other strategic partners that Dave has relationships with.
That's great.
Yeah.
So, and you know, for sure, like kind of, we're getting really interested in finding out our intangible asset so that we can value it and make the value even bigger.
Yeah, I think it's a huge opportunity for systems engineering in particular, because the solutions that you create all the time, right? I mean, this is your field of expertise. It's valuable, it's unique, but it pulls from so many different areas to create something new. It's not necessarily like a Black-Scholes model, which is just a new way to measure risk and financial outcomes, right? And so in that case, I believe that the business work on identifying, developing, monetizing is higher. You have to think about it a little more in terms of what you can measure and how it can be valued in the current market that we work in, too.
Wonderful. So, you know, I've been asking questions. And I hope actually I really feel like very kind of relaxed and like feel very, you know, enjoyable conversation with you. You know, I've been asking questions. So now, before we end this, do you have any comments, anything that you would like to make?
So definitely a lot of identification and praise for the systems program at Cornell. I mean, this really, our business model at Jahani Associates is heavily influenced by the education that I got at Cornell and by systems engineering, right? I took a lot of classes. I took advanced corporate finance, I took risk simulation and optimization, a lot of classes, but it was the systems approach that taught me how to really see and identify the problem and then create the opportunity or meet the opportunity. So that's the first comment. And then a question to you is really, you know, based on, so now you've heard this, right? You obviously are very capable of understanding this and utilizing this, and now you're thinking about your projects and the things you have going on. Has this sparked imagination or any thought about how this kind of approach could create more value for what you do and meet some of your needs?
Yeah, absolutely. So actually, when you were talking about creating a standardized reporting procedure or reporting protocol for example, financial firms or healthcare firms, right? How about the higher education system?
Yeah, that's a good
right.
one.
How about the higher education system? And of course, we always read like U.S. News ranking all these educational programs, and I really don't know how this intangible asset of a higher education institution or program is counted in that thing. That's why you can see that after I heard about your, this conversation, I already kind of started imagining, oh, maybe I can consult you to find out how we can find out, the key intangible asset that can be better developed and better used by the higher education institutions. So I think that's one thing. So if we can also have some kind of standardized reporting among the higher education institutions or programs, I think that would be very helpful. So I think that's one thing. And also another thing is, this intangible asset, and you said that it's going to be valued. And as the director of system engineering, actually, after I took over the program, I have been trying to work with the staff and the faculty here talking about the value creation for the customers we serve, which are the students,
right,
including on-campus MA students, and also distance learning system engineering student. So how can we discover the gaps in this intangible asset that can be filled, that can be used to create added value to the students?
Yeah.
So actually that's something, again, you can see that where I think your expertise will be so critical and helpful for us.
I would love to talk and continue the conversation about those things, and definitely in education and brand value. And Cornell is such a powerful institution just by nature, and then inside that is Cornell engineering, and then inside that is systems engineering. So there's definitely a lot of specific parameters that will drive value more than others, and we have to identify, develop, and monetize.
That's wonderful. I really appreciate your time, Josh.
It's my pleasure. Thanks, Oliver.
Okay.
Take care.
Yeah, thank you.